Are you tired of missing out on profitable trades? Are you ready to take your trading to the next level? In this video, we'll be exploring the key factors that can make or break your trade entries. From analyzing market conditions to identifying key areas, you'll learn the tips and tricks for finding the best trade entries and maximizing your profits.
How do we know when we should move our entry? Or how do we know when this is confirmed a lower low? And feel free to unmute yourself.
When it makes a new lower low.
Okay.
A lower high, I mean, sorry.
Or, well, this, how do we confirm this is an actual lower low? Like, I guess what I'm saying is, how do we know that this is an actual lower low and that this is confirming a new trading range where we have a lower high and a lower low? How do we confirm
the candle
that?
closes?
Structure.
You need
structure, right? It closes below this point, right? I think everybody's saying the same thing, right? It makes a lower low and it closes below this low. But how do we confirm that? Like, how do you actually do it?
Higher time frame.
Okay, so let's say this is a 15-minute time frame. How do we confirm it? Let's say 15-minute right here went and closed. This is how it closed, just like this.
Go to 4 hour.
Yeah, we go up a time frame. If it's a 15, I'm probably not going to go to a 4 hour because it's going to consolidate way too many candles. I'm probably just going to go 1 or 2 time frames within the range that I'm trading. So if this is a 15, I would go to like a 31 hour. So this is really important because you need to confirm this on 2 time frames. You need to confirm it on 2 time frames, right? And I knew, did you backtest your example yesterday?
Yes, and I realized that my entry was offset because I didn't pay attention to the key points you were speaking about, like New York Open, Equity Open, and it was one more.
Well, we can take out the time variable for now, right?
Yeah.
It's like, this is going to happen on all pairs. It's not just something that happens on US 30 or gold. It happens on every single pair that you're going to be trading. That's why when I asked if anybody has experienced this, almost everybody has raised their hand, and a lot of people were raising their hand and smiling and laughing. Like, this is something that happens a lot. Help me. Let's make adjustments here and change my perspective on this. So what do we look for entries? Like, what do you feel confident about to say, yes, here's my pattern, and that is the spot that I'm going to use for an entry? Let's break this down piece by piece. What do we, like, for me, I want to see clear manipulation, right? And I love to see that up candle and then that engulfing candle and then just an impulsive move. So not too many of the opposite color candles. Like, if I'm looking for a strong bearish impulsive move, I'm trying not to see a bunch of green candles. I want to see like 3, 4, 5, whatever it is, impulsive move. That would make me feel real confident about an entry like this. We can see price ran this high, right? We have like a little bit of a signature pattern here. So when we talk about moving entries to another point, because like, let's forget about the structure point, the question I asked about how we confirm this, because we'll talk about that in a minute. And then we'll get into the actual charts and we'll show the example I talked about yesterday that we were actively trading. We caught that yesterday. And then the one that actually happened today. Well, actually, I didn't catch it yesterday. Luke did. I had to run and my freaking mouse died literally at the time that I went to enter that trade yesterday. But the guys caught it. So I made up for it today. But on gold, is it the bypass? Yeah, so this is like similar to a bypass, but it's like if you didn't know what the bypass was, and you don't look for you don't need to ever try to trade the bypass. You just got to get really good at trading one pattern consistently. So like, let's just forget about the bypass. This is just some really key points here that we need to know, regardless if it's a signature pattern or a flag pattern that you're trading, right? So we're going to just break this down component to component, because a lot of people like will follow the structure, and then when they see price, like even the same thing, let's say price did this and came short from your entry and then made a lower low. Naturally, people now focus on this swing point here, okay, because now I have a new lower high, I have a new lower low, and I'm going to transition my entry from here to here, right? Because there's a, you know, a kill zone, and there's going to be a last up candle, whatever that might be. So when we think about what we want to see for a candle for entry that we'd be really confident in, what's the difference between this point of interest and this point of interest?
One is just consolidating and the other one is taking liquidity.
Yeah, so I would maybe shift it a little bit and say one is manipulation, clear manipulation. It's running highs before running down. And then this one here is the test of this candle. It's not manipulation, right? So, you know, many people, what happens is this will happen and price, and again, we're going to get into the structure aspect of it. And, you know, price does something like this, whether it tags them in or it is a missed entry, and they instantly will transition their entry from the initial spot to this spot, only for price to do this, run back up and hit this candle again, running the high of this one, stopping them out, and then doing something like this. Right? So the big key there is, you know, when price transition to another spot, it's like, one, I want to see that this is a manipulation candle. I really want to confirm some type of pattern similar to this. But if we take that component out and we look at the structure point, and then we can go up and use your example and then the one that happened today on US 30, it's a lot of it is structure. So again, it's like, if this is a 15-minute time frame and this pushes down like this and makes a 15-minute low, and then let's say it starts pulling back pretty fast, but a 15-minute time frame confirms a lower low, and we go to a line chart, and let's say this is kind of looking like a line chart. We go to a line chart, we have a low, it closed below this. So it justifies a lot for people, like, okay, I'm just going to move my entry to this point here. And now they completely write off this candle here. And these candles can be tested more than once. And that's where a lot of people just get run over, because the entry goes from here because it's just a swing point. But again, it's what you really want to do that can get you caught up. Is I like to keep focus on that manipulation unless I see clear manipulation, one, on that new swing point, and then two, that lower low here is confirmed on multiple time frames. So a 15-minute, right, and then within a range of 1 or 2 time frames above the entry or the time frame that I'm using. So if this is a 15, I want to confirm it on a 30-minute, 1 hour. And if I see that there, then I will think about transitioning my entry. Otherwise, I keep it on the same spot. So I'm going to show you some real-time price action. Here's today. This is the actual markup. This just happened before we got on this call. I posted this. I posted this in the chat. We'll go over this one afterwards. We also have the one that you sent me yesterday, right? So let's go to the one from yesterday first, and then we'll go to this one. So this is the price action here, right? So I'm going to do this, and we're going to go in replay mode and kind of walk it through. So this was the point of interest that we were looking at yesterday. I was looking at this candle specifically yesterday, which was inside a higher time frame 1 hour candle, right? So if you were 1 hour, if you trade mid to higher, or if you trade lower, it was basically the same candle. So here's like that 1 hour candle. That's also a structure point. You can see that right here. So lower high, lower low. You can see that, that's confirmed. Where we were looking at, I'll drop to a lower, was initially, let me see, initially it was this spot here. I'm not sure on your markup, what you sent me, if that was a spot that you were also looking at. Let me see if I can pull up your markup. I knew really quickly. Okay, there's yours. Let me pull that up 1 second here. Okay, so here's your chart, right? So that's what happened yesterday. So he went from this entry here, price pushed up above that entry, only to then run to the low and hit his TP. And that looks like pretty solid risk to reward here. So what we were looking at was, we were following the 15-minute structure, and we can see that here. It's making a series of lower highs, lower lows, etc. And we also had a manipulation candle right here. And that was the point that we were focusing on initially, right? That was the shift, right? So that was our main focus point. That was the one that I talked about yesterday. I knew when I sent you my markup on that pair. And let me see if I can pull up. It won't let me. That's the markup I sent him from yesterday. Just so that was, don't mind the one on the left. That was a secondary entry that came short. But this was the candle here, the same one that we're talking about. So that was the point, and then I just went to a 15-minute time frame just to, because it was a matter of sizing, and we wanted the bigger stop loss because the other one was just too small. So initially, we can see, I'm going to mark up equity. That was 930 right there on the nose. So coming into equity, that was our last swing high to our swing low. We basically just threw the fibs on there. We were looking for a retracement back into it. It was a pretty straightforward trade, right? Just following structure and manipulation candle, engulfing candle, and we had a number of targets. Price comes in right at equity. That was the catalyst. Pattern was created, so we're looking for entries. If pattern's created for a news-based catalyst, it's entry. If there's no pattern, we look for the news-based catalyst to give us the pattern. So you can see right on that line, exactly at 930, price spiked up, exactly what it did today as well. But now it did this, right? Price pushed up and then started to come down aggressively. And then this can also be classed as like a double tap. But this is the difference of getting the double tap when it's actually confirmed and when it's too soon and it's kind of inviting a higher risk setup. Similar to what he shared right here, right? So you can see first entry, price comes up. And what was this time frame? We'll use the 6 minute just so it's congruent with the markup that you did, right? So now we have this. He saw price come up to that entry. You have a nice candle. You have a nice engulfing candle. He marked this up. So the two main components before we get into the structure, what is stuff that we like to see for entry? Is this taking is this price action manipulation or a rebalance? This price action here.
Rebalance.
Yes, it's a rebalance. It's different than the initial patterns where it's running on highs and then running on and running on lows, creating structure points with manipulation. This is a rebalance. This isn't manipulation. Now, if this ran this high up here and did something like this, and then went down, that's manipulation, okay? But now we go into the second point, okay? Let me press play here, okay? So I had a pretty strong move, okay? Do we have a confirmed lower low here?
Oh, yes.
Yes, we do. So how do we confirm that? Right? Keep in mind, we're on lower time frame here.
I would go to a higher time frame.
Right. Line chart. Do we have a confirmed lower high and lower low here? Or do we
Lower
just have
low.
the initial swing?
The initial swing.
Yeah.
Right. We never got, like, look, the entry he's looking for right here on that price action, it doesn't exist here. It just looks like a pullback into what? This trading range, right? So inside this price action, it showed this. Price came up and then down, and then he's looking for his entry on this price action that you can't even see on a 30-minute time frame. We didn't even look at 1 hour. There's 1 hour, still in the same trading range. Now, if that price action where he got his entry there looked like this, and then was pulling back, it's a different story. Does that make sense for everybody? So look, here's the 1 hour 30 minute, looks very similar. And then we go to the time frame he's trading. So look, I'll mark up his swing points just so you can see it compared to that 30 minute. There's the trading range, right? Swing high to swing low. We know that, right? And this is just, we already talked about the candle. It's not running highs. It was a rebalance, a pullback that we're using for entry. That was testing the manipulation candle. Let's go to the 30 minute. All right, I'll move that candle out of it. His swing points are kind of just floating there. Look at the swing point. That was the 100 mark. That was where his swing high is. On a 30 minute, let alone 1 hour or any other time frame, it's not there. So it wasn't confirmed. Does this make sense for everybody? Because everybody raised their hand saying that this happens very frequently. And this is one of the things that will save you so much money. Protecting and preserving your capital is as good as wins. Because when you go back a quarter, when you go back 6 months, and you look at a year, and you look at the amount of losses that occur, sure, we're playing risk to reward, and we don't need to be winning more trades than we lose. But when we add up the amount of losses that occur, and when you look at that, what that equals, what that corresponds to percentage-wise, it's pretty big. So we can do a good job at protecting that and preserving it and avoiding losses. That's why I say avoiding losses are as good as wins. And even something like that can transition you into profitable trader. Because if you're seeing break evens, thinking about all the trades that weren't confirmed or that you avoided the losses, that's adding that 1%, 2% equity in there. And instead of being a break even or a loss situation, that can be a profitable situation. So being able to spot stuff like this and know if your entry is premature or not, or if it's confirmed or not, right, can save a lot of money. So I really want to make sure everybody is following that price action here. Does that make sense for everybody? And if you don't, it's perfectly okay. There's no stupid questions here. I really want to make sure everybody understands it, because this is going to be something that you're going to have to endure pretty frequently in the markets, and it's being able to confirm this.
Hey, Danny, I just want to mention something quickly.
Sure.
So on Inut's trade yesterday, on the 5 minute, it appears that there's relatively equal highs that were created where his stop loss was, where on your trade today, there was also relatively equal highs, but you were going after that target.
Yes.
Do you see that or no?
Yes. So like I like that type of situation where, and I can probably dig into your point, because I know exactly what you're talking about. I like seeing that. And again, I have an experienced eye. Like when we saw that, we knew where the manipulation was, and I love seeing short-term highs sitting right below my entry, because when price runs up and runs that high, like what he experienced, and then comes into the manipulation candle for entry, for me, it's just the gasoline. It needs to just rocket where I want it to go, right? It's like it's where money's sitting. It's a high or a low, whatever that might be, or a set of equal highs. So yeah, I can show that on the other example, because I think the equal highs there were pretty clear. But yeah, we can definitely break into that for sure. Because that's kind of like the bypass pattern. It's essentially like, again, and you don't need to know what the bypass pattern is, like just being able to say like, okay, do I have confirmed swing points here structurally on the time frame I'm trading, and then within a range, right? Like I like to pop up, that was a 15 minute. We jump up to the 30 and the 1 hour. It showed the same thing. It confirmed the same thing. It wasn't there, which we can see here, going back to a line chart. We can see the structure point here and here, and then we go, we jump up to the 30, it's not there. We go to the 1 hour, it's the same thing, right? You can see the 30 and the 1 hour very close. Let's get rid of those. Is everybody following this so far? Thumbs up. I know you're all muted. I'm asking questions, and
No, that makes
waiting
sense.
for responses.
That makes sense.
Cool.
Hey, Danny, if you're trading something like the 1 hour, you still go up a couple of time frames to verify, like you did in this process here.
Yeah, I mean, you can definitely. 1 hour is a time frame that's going to hold weight for you, because I'm kind of classing that for me, that's like borderline mid to higher time frame anyway. But again, like, you know, you can confirm it on the 4 hour, but 1 hour, you know, you got to keep in mind, like if we're looking at a 15 or lower right now, and we're going to that time frame to confirm that 30-minute 1 hour, you know, whatever that time frame is, I like to kind of get a surrounding view of it. What does it look like on a lower? What does it look like on the time frame I'm trading? And what does it look like above? So, you know, you'll see if it's confirmed on a 1 hour, more than likely it's going to also be confirmed on a 4 hour. But 1 hour for me would also hold enough weight because it's a 1 hour time frame. But you could also check like 2 hour, 3 hour, etc. So before we go to the other example, the one that happened today, I'm going to go back here. So here, I think you had the 6 minute here, right? We can label that 6 minute, oops, text, 6 minute entry. And this was the initial entry here, that 15 minute. And then let's watch what price does. Keep in mind, like this first spike up was right at the open of equity at 9:30. And then price does this. I'm going to put a line right, well, it's basically the same line there, but his was this right there, stop loss right there. And then your target, I believe it was right there on the low. You can take that off there. And then we saw price play out like this. Looked like it was going to be good for a second, spiked up, grabbed that money above this high, respecting the 15.
Crap.
And then ran to the target. And that's painful. But it's also like when that happens, you know, I think you're really good at this. It's not like, I think you were slightly annoyed. I think you said something like, oh, come on, man, it's not fair. Right? But when you get something like that, right, especially at a critical time where we know, okay, direction's pretty established at this point. We're in equity, New York, London overlap. This is when we're anticipating the moves and having targets that we believe price is going to run to. To me, this is still a win. This is still a positive. I'd be more concerned if price just completely reversed and did something like this, right? Like I'd be more bummed out of price doing something like this and just completely reversing and going, I can't move the screen, and just completely reversing and flying up and expanding to the upside than this happening. I'd be happy about this. I'd be more aggravated or frustrated saying, oh, that's not fair or whatever. I forget what you said on the other scenario, right? Because you got your targets right. You read the structure right. Your directional bias was on point. Your entry was slightly off by a smidgen. That just means we have to do what we're doing now. We have to just back test it, ask questions like you did, and then we can optimize for it. And we can make those changes moving forward. I guarantee after the questions you asked me yesterday, after that happened, and a whole training dedicated to it, you're now more self-consciously aware of that situation. And the chances of you repeating it, because especially now, if it's in your trade journal now, the things that you need to confirm before moving to an entry or confirming an entry, the chances of you repeating that same thing is going to be a much smaller. Make sense? So it's really like your perspective. You're always going to be challenged as a trader.
Yeah.
And being able to, go ahead.
Yes. Yeah. Thank you so much. Yeah. I'm seeing this as a win, as you said. especially now after you back tested like professional and you made me understand, just respect the structure points and stick with the structure points. Don't get confused about the noise, before the before the pattern will play out. Yeah, thank you, man.
Yeah,
Thank you.
I mean, it's just, that's what happens, right? Like we just want to consume education and then apply and then document and then ask questions, right? We always want to be investigating, wear our Sherlock Holmes hat, right? And just be like asking questions. And then it's just, from there, it's just optimizing, right? And now that we've talked about it, now it's just, we have very specific things that we can confirm and we can look for, right? Is price, is my entry point manipulation? Is my entry point, like what is price doing now? One of those questions. Is price rebalancing? Is this the pullback into the manipulation? Whatever that it might be, right? And we can easily, just finding that, right? There was kind of two things here, right? The structure and then not being manipulation. That was rebalance price action. But again, it's like, to me, this is a win. And, when this happens to everybody, this happened to me. And when I was, it's going to happen with every strategy. It's just, you start getting pieces right. Things start making more and more sense. You keep asking questions and then you just start optimizing. And then that's where you start seeing the results, the shift, the transition through the stages. But it's like your focus and your perspective and how you manage your emotions on and off the charts while this process is going to happen. That's really what's going to determine if you're going to make it to the other side. Like if you have to I talk about this pretty frequently. You have to be really good at having things, you have to get really good at having things not go your way. You have to get really good at having a mindset of this is lessons, not losses. You have to have the skill of being really good at taking losses. Like professional traders are really good at taking losses. As crazy as it sounds, you have to. So let's go into the example from today, right? So we kind of had a directional bias established. I'm not going to get into that. I'm just going to keep it more focused on what we're talking about. The structure was there, the targets were there, and we can kind of watch the price action as it kind of lines up for today, and we can walk through. So here was how yesterday ended up. It kind of established this bottom, as you can see right here. This turned into previous day low. We come into Asian session. That's typically, especially for a pair like US 30, that's typically where, price isn't really doing much. It's kind of consolidating. So you can see here, it's kind of more or less just pulling back. Very small candles, not really doing much. We established the Asian high. You can see it, we're coming into my markup. Moving sideways. So you can see, like, here it is, the Asian range. This is the very classic Asian range price action. Not really doing much. Kind of almost back to where it opened. And then we are approaching London. So now the green hits, now we're in London session. See the difference in that price action? Very fast moving price action. I'm gonna go to the 15. Right, so what do we have at this point? You can see we've come into my markup. You can see price created a bunch of short-term highs. You can see a break retest level, relative equal highs, and then we come into London session and we can see, right, that lower time frame will confirm it, the higher time frames will confirm it, trading range. We have a run on high, we have an engulfing candle here, right? Spike up, running these highs, making a low here. I'm going to put this on right here. That is 930. That's equity. right? So again, what do we do if a pattern is created for equity? And this is for any event. This is for any pair. Let's say this is Euro USD and there's a news event at 8:30. When do we expect, what do we do? If the pattern is present and this is EU and at this line here, that's 8:30, what are we looking for?
Entry.
Entry. There we go. There we go. So we have a pattern created. We have our swing, right? Let's watch price as it unfolds, right? Keep in mind, like I'm not here yet. I mean, this is just London price action. You know, I'm more or less watching this around, you know, around like 8 a.m. and then 9 a.m. getting ready for equity, right? Because I'm in East Coast. I'm looking for the New York London overlap. So this is all happening. Most of this is happening. This is what I'm waking up to and coming into the office to see. So we can see price started to pull back. Okay, price made a push down. This price action right here. What is this price action here?
Rebalance.
Yes, rebalance. Is this manipulation?
No.
No. So that high becomes a risky spot to move your stop loss. So we're not taking like, and it's like, you want to have both, right? So if it makes a lower low, and let's say that is confirmed on multiple timeframes, is it manipulation, right? So we have a couple of things that we can gauge here. Manipulation candle, like I don't want to use a rebalance, a pullback, pullback price action for my entries. I want to use manipulation for my entries. So we can confirm it that way, and then we can confirm it structurally, right? So now you can see we're in New York open now. That maroon background is now painted. This is 8 a.m. New York is open. So when we are looking at this and price came down, my biggest thing here is just don't take the target before you start pulling back for equity. The target is the only real target, which was this previous day low. So you can see it made this low and then it kind of started hanging around, consolidating a little bit. So when we're at this point, the only manipulation that is present here is in one spot, and that's the London high. This is not it. That's a pullback. That's not a manipulation, right? That was a pullback, rebalancing this area here from that expansion, pullback, continuation. And this is just a risky spot. So we don't transition our entry from this to down here and focus on this trading range. We keep it here. Into what Kenny was saying, and correct me if I'm wrong, Kenny, was that what you were referring to?
Yeah, so on yours, it created the equal highs, and that's a target before your entry. And on iNewt's, it looks or appears that it's relatively equal highs at its stop loss. And so it went,
Right.
It took it and then dropped.
Right. And it's good because like we can like, you know, everybody's going to be a little bit different in their journey, right? So some people might have spotted that, some people may not have, but like just being able to realize, okay, this is, because look, I'm going to go to a 30-minute time frame. Was that structure ever confirmed?
No.
No, we're still trading between the London manipulation and the London low. So we keep the entry and the focus on this trading range. Anything else, it's great. I love seeing short-term highs because it means people are putting their stop losses on there, and that's where we get the bypass, where price will run on these highs. And for me, I love seeing that. I love seeing fast price action that runs over these highs, comes into the manipulation candle, because as fast as it comes in there to get the money, the faster it's going to be to get out of there, right? So I don't know if you saw my markup on mentor post section.
Of course.
And I'm not showing stuff that I don't take. We're not talking hindsight here. So let's go to the candles. Let's go back to the 15-minute. We have relative equal highs here as well, but this high here was just a rebound. So look at that price action. We don't have a pattern there. It was just a strong candle up, A little bit of a doji candle before it started peeling over. It did make an impulsive move running this low here. But again, we didn't get that confirmed on higher time frame. This is rebalance price action. So for those two reasons, just like the other example that I knew shared with me, we keep the entry on the initial spot. And then this is what happened. Again, watch, this is the news, this is the time-based catalyst here. Again, this is gonna happen for every pair. So like, let's just take that out of there. And we don't even need to know that this is US 30. Doesn't matter if it's EU, CAD, JPY. The patterns all apply to everything that we're trading here. The price action and structure is the same. So this is the entry here. I can mark up a couple of things here, right? We have that break retest, relative equal highs, that's pushing up. This is the manipulation candle that we're focused on. That last London candle that created this impulsive move, came back up, tested, and then pushed down, didn't confirm that lower low on the higher time frame. And then this is what happens. Let me go back and I'll just drop it down a time frame because that happened too fast. I'll drop it to a 5 minute. And you know what? I'll just keep that there just so we can see how closely correlated this is with time. So here's the price action. Let me see if I can slow it down. Okay, so right now we're at equity. It just kind of happened so fast. So I'll move that out of there. So there's price coming pretty aggressively. And at that point, myself, Luke, Mirko, we're just sitting here with our finger on the trigger, just waiting and expecting this high to get taken. Price comes up, we're ready, we locked and loaded. It comes up, hits the entry, and then out of there. As fast as it comes in, as fast as it gets out and runs that previous day low. That's where we had the target. That's where I exited. And we can see where price is now. I'm not really sure, we haven't looked. It's just continuing. So you can see it's giving the continuation move. So I believe, let's get out of current price action. Yeah, so you can see it, it did decent numbers. That was a 1 to 7 down here. It's not really too important about the risk to reward versus what we're talking about. But does everybody understand this stuff? Because this is so important. This is going to help you avoid quite a few losses, because this is going to happen on just about every single pair that you're trading. And this is how, if you're looking at a bypass, or if you're looking at double taps, right? If you miss the entry, because a lot of people, where a lot of traders get jammed up is this. So let me go back to here for 1 second. Let's say this was your entry, that red line. What happened at this point? What are most traders feeling at this point?
You say you missed your entry.
You missed your entry, it's running without you, and you're in disgust. I missed my entry by a smidge, and now it's just taking off. So the fear of missing out is now amplified. And what do they want to do? They want to look for ways to get in. And for them, they're getting caught up. I watched this mindset guy the other day. Because that's something I'm always working on. And he was talking about how feeble the mind is for human beings. And he ran this exercise, and it was shapes on the screen. And he said, what color are the shapes? He showed red. They were all squares. A yellow square, a red square, a white square, a black square. He had everybody start calling them out. Red, yellow, green, whatever it was. And then he said, okay, now do it again. Whatever the color is, say it. But now it was the word white, but it was yellow. It was the word blue, but it was green. It was the word red, but it was white. And what do you think people were saying? They were reading the word. They were getting caught up. It's just, he was making an example of how easy it is to get tricked. Your mind can play tricks on you, especially in an environment like on the charts when we're trading, because emotions are playing a big factor.
Danny, who was that speaker?
I can find out who it was. It was some guy I normally don't watch. I actually kind of stumbled across him, but I can share that with you. Give me a second. I've been actually reaching out to different people, life coaches, psychology coaches, mindset, trading coaches, trying to get somebody to work with us.